Dear participants to panel 2, I'm delighted to co-chair with Anthony the panel on board perspectives, composed of a distinguished audience. We have Maria Perdicchi, Chair of NED Community, Monica de Virgilis, Chair of Chapter 0 France, Pascal Durand-Barthez, lawyer and specialist in corporate law, Jock Lennox, Chair of Audit Committee Chairs Independent Forum, and indeed, all of them have been and are also non-executive directors in several listed or non-listed companies all over Europe. This will bring their views on how board will be different from now to, say, 2030, with a strong focus on purpose, vision, strategy, the stakeholders' engagement going forward, the reviews of risk, impact, and their mitigation integrated in the strategy, the incentives and remunerations of reflecting the long-term objectives, the processes for adequate reporting and assurance controls, the focus and expertise needed to meet their responsibilities, and the characteristic to lead the business to become successful and remain successful in the long term. And indeed, more and more, the challenge and support to management, as we have seen during the recent crisis. Now, I will leave Anthony to lead the discussion of our panel.
Thanks ever so much, Michel. And what we'll do is we'll have opening statements by the 4 panelists, and just to give the panelists a moment's notice, each will make a short opening statement. If I start with Maria, then have Pascal, then Monica, and then Jock, in that order. And really very much look forward to your opening statement. And then after your opening statement, we'll go into a discussion of the key issues you have raised. So many thanks. Without any more ado, over to you. Thank you, Maria.
Thank you very much. I'd like to be very focused on 4 main lessons we have from this crisis and open them for discussion. First of all, I think we are really, we have seen that this crisis has been unexpected and extremely severe. So we have learned that the companies that have succeeded are those that have been more able to cope with an incredible amount of uncertainties in an agile way, in a flexible way, with a strong leadership. But the point is, where is the next crisis coming from? How do we face unexpected risks or emerging risks for which we are not fully prepared? And what is the role of the board? First of all, to select the right management, of course, and the right leadership, but also making sure that the right resources will be deployed in order to prepare for contingency planning in different scenarios, and the role of scenarios themselves, which are becoming more and more important, but also difficult to face. The second lesson, I think, is the ESG, on which we will elaborate a lot. We cannot anymore treat ESG as a sort of compliance area where still some companies look in that way. It's going to stay, it's going to be more and more incorporated in the long-term strategy. This is not easy. It requires a lot of work, a lot of competence, a lot of serious challenge to management, which of course also means focusing on the board ability, skills, competence in the area. And then, and this is also related to our relationship with stakeholders. This has changed dramatically during the crisis. Without stakeholders, dialogue with stakeholders, we would have not survived. Think about our employees, our customers, the government, the communities where we operate, and all the difficult moments that companies have had to face, and the dialogue they had to engage with stakeholders. So the lesson here is how we will deal with stakeholders from now on. How are we going to really interface with them, not just in the committees, but in the board discussion? And what kind of, and also how we're going to map them and select them. I don't think we will be able to to perform our fiduciary duties, looking at all stakeholders' requests, but we will have to make a very serious consideration which are our key stakeholders and which are the requests and the needs that we have to face and try to accommodate within the overall strategy. The fourth point I would like to make is on the government role, which has changed dramatically. Government has stepped in to help to manage the crisis, think about banks, but also other industries and regulations, safety, health, and so forth. How are we going to deal with the government from now on? We would expect the government to step out as things will normalize, but there will be a lot of areas where government regulation, moral suasion, intervention will clear set expectations with which the board members will have to deal with. So think about social people, wellness, safety, but also our consumers and the environment and green finance and many other aspects with which we will have to deal. And finally, investors' requests. Investors are going to look more and more to sustainable companies. At the same time, we will have to deal with investors which are still focused also on short term, with activists that will try to position themselves in this transition moment to identify vulnerabilities and attack companies. And the board will have to manage difficult situations between looking at a long term and decided on short-term factors, which would also make an important, will be an important element to protect the company and the ability to pursue long-term strategies. Think about, in particular, the policy of return, buyback, and dividend distribution versus long-term investments, and also employment decision regarding employees, labor demand, and so on. So it will be a very, very difficult to navigate, I think, between these two kind of requests, which I think will remain there, because I don't think all investors will position themselves for long-term sustainable growth, but there will still be a lot of other more opportunistic approaches. And after all, until the corporate law will not change, our fiduciary duty is to work for all shareholders and listen to them, with also take into account stakeholders. Managing this will not be easy. I stop here and then maybe we can discuss more later.
Thanks ever so much, Maria, for getting us off to a great start there. And just the whole range of issues, the crisis that you covered, and the changing role of stakeholders, changing role of government, and the very practical issues around looking to the long term, but making sure you survive the short term. So if next I can hand over to Pascal. Pascal, very much look forward to your opening comments on the panel.
Yes, thank you very much, Anthony. Just 3 points, 3 ideas only, in order to keep to my assigned 2 minutes to start. Just 3 ideas on the consequences of all that we have said so far on board composition and organization. As far as board composition is concerned, the buzzword is diversity. We've heard that a lot. It's not something which has been brought by the pandemic. It's something which a tendency which was already there and which the crisis has probably accelerated. But what does that mean? It means that diversity is needed for more competence or competencies in the board. And it's not the diversity for the sake of diversity is not worth mentioning. What is useful is that it can bring, that diversity can bring more competencies complementary to each other, because boards have more and more to be considered as working teams. What are the diversity? What is the diversity going to bring? What are the new competencies it is supposed to bring, the new expertise? The former model of most boards was to be composed, aside from family groups, of course, it used to be conformed mostly of CEOs or former CEOs or CFOs or people with financial background. We'll need more and more people who know the business sector in which the company is operating. And the pandemic has shown that the board needs more and more to be hands-on the operation of the company. Human resources, digital expertise, which poses a number of problems, environmental expertise where relevant, and it's not going to be the same depending on the sectors in which the companies operate and which specific risks they have to face. But more generally, I can hear from time to time people speaking of sustainability expertise. I don't think it means much. It is too wide, and sustainability is the business of the board as a whole. It cannot be delegated to a committee. And finally, a third idea about what is going to be the impact on the organization of the board and especially of the committees. Again, a sustainability committee doesn't mean much. I don't think that you can speak of that more than you could speak of a profitability committee or a competitivity committee, for instance. The business sustainability, again, is a business of the board as a whole. However, I think that we will have to probably change or review the approach to the organization of committees, and we cannot stick to the dogma which is result from the current, from most of the current corporate governance codes, which focuses on the three basic committees of audit, remuneration, and nominations. We certainly need to have to question that and to have a more flexible approach depending on the specificities of each company. That's all to start with, and I expect that we can discuss that a little further if the time permits.
Thanks, Pascal. There's a great deal you've raised there, both on the board composition, but also the structure. I'm sure there's a lot of issues we can discuss, so many thanks indeed. And Monica, really look forward to your opening comments next.
Yeah, hello everyone. Do you hear me?
Yes.
Yeah, so the angle I'm taking is a provocative one. So whether in the stakeholder era, the board should not have a more direct relationship with the stakeholders. And really, this is an open point. Of course, I don't have a solution, but nowadays, the boards have very sporadic direct relationship with the stakeholders. And this despite the central stage, purpose, and stakeholder activism have taken in the last couple of years. So as a board, we are invited to big gatherings, which take place typically once per year, such as the Customer Day, the Sustainability Day, or the Capital Day. While investors and shareholders are demanding more and more meaningful engagement with boards, as regard to ESG issue, for example, before ESG, the request for engagement was on remuneration. Through the remuneration, they gauge the independence of the board. And through sustainability, they want to understand how deeply the board is involved on climate risk assessment, for example, or net zero strategy scenarios. So traditionally, many CEOs have resisted in putting on an exec in front of investors. The point is that the CEO doesn't really have the time to fix up damages of an inconsistent communication. Now, because the push from investors and the growing attention to non-financial issues, I see the door a little bit more open to a direct dialogue on very specific points. So, of course, not talking about financials, but on very specific points, the door is open for independent directors to have a dialogue. Now, why to have a direct dialogue? Is that needed? there is no solution that fits all to every company is a special case. So no one size fits all solution. But the rationale of having a more direct connection, the rationale of having a more mature relationship with the stakeholders could allow the board to take difficult decisions and pre-engage with the stakeholders before the decision is taken. Very much like on the remuneration, we are exposed with pre-engagement dialogue with shareholders on some remuneration issue. And what I learned through that exercise, that even on very difficult issue, the transparent communication and the strong rationale are really keys for a constructive dialogue. So we could consider to, in some cases, the same approach extended to stakeholders. Let's consider the case Maria raised with the arbitration between a dividend payout and job protection. This is just one of the many dilemma cases we have been confronted during the crisis. And we have really realized that the global interconnectedness with the stakeholders and the society. So the real change will come when stakeholders' voice is seen as the normal part of the decision-making process of the board. So the going beyond the current direct engagement requires a real determination, a real business case, let's say, and willingness to take risk. There are good examples, good experiments in bringing the stakeholder voice in the board room, like an appointment of an advisory board composed of scientific experts and civil society representatives. So every company has to decide which is their own formula, map the material stakeholder, which one out of the total, let's say, ecosystem of stakeholders are material, and then decide whether the governance framework in place, from the board composition to the company organization, the risk control, the incentive, and so on, is fit for delivering the strategy. So the board will need to decide where the responsibility will lie for ensuring the delivery of stakeholder aspect of the strategy. That's all from my side for the time being.
No, thanks, Monica, and thanks for highlighting, you know, the dilemma of stakeholder engagement, that is not all easy, that there are challenges. Jock, very much look forward to your opening comments.
Thanks, Anthony. Hopefully you can hear me okay.
Excellent.
Right.
Clear.
Yeah, it's interesting hearing colleagues from all around Europe with their perspectives and how really much common ground there is. I mean, my comments definitely have a UK perspective, and our position is coloured by the number of reviews that we've had going on the performance of companies over the last little while, which I'm sure people are familiar with. But bringing that all together, I think we're certainly in a climate reinforced by the experience of the pandemic, of the need to improve the confidence and the quality of our corporate reporting, the performance of boards, and the assurance around that. The pandemic's undoubtedly given us a shock to our resilience and the pace of change. And it's the companies that have been adaptable and can deal with uncertainty that have thrived. Obviously, different sectors have done different things. And I think we're sort of moving to a world where we really have to explain how we do things and be judged on that as much as on what we've achieved. And, that goes for all the stakeholders, which we've heard about from other colleagues in terms of the importance of their contribution, whether that be climate, our responsibility in relation to climate, whether it's in relation to employees or whatever. But we're certainly feeling that the need to demonstrate our performance through doing, as opposed to just what we have achieved. And that does mean we need to be much more explicit and transparent on how we're fulfilling our responsibilities and measuring up our competencies with those responsibilities. So I think that that does bring under the lens the breadth of competencies that we do have within the boardroom, and the ability to cope with that, with the change. But notwithstanding the need to demonstrate our contribution to society and so forth, we mustn't forget the importance of the financial performance, which of course at the end of the day is what provides the fuel for everything else. So it's a question of having the right allocation of capital to achieve our objectives in the round. Certainly one of the changes we're going to see and have to get used to in the UK in this context of the restoring the confidence is our performance is going to be much more regulated than it has been hitherto. We are waiting to hear from the government what they're proposing to do in that regard. But I've no doubt there will certainly be aspects of our performance that come under the microscope in a way where we've been much more self-regulating and self-reporting up until this point. So that is going to make us, boards much more thoughtful on what they're doing, which, if done well, will be for good, and it won't just be a question of adding regulatory costs. And therefore much more explicit on how we're fulfilling our responsibilities and how we have the competencies to achieve that. So we are going through that process of change at the moment, and undoubtedly that does align back to taking responsibility for our stakeholders as a whole, which certainly is the theme I'm hearing from my colleagues on this panel. So those are my comments, Anthony.
Thanks ever so much, John. I mean, the four panelists, you really raised a range of issues. I think we don't get any choice as to the time we return to the panel, to the group. So in about 10 minutes that we've got, let's just touch on one or two of those issues. I mean, I guess on the structure of boards and board committees that Pascal raised, Jock, do you think board structure will change? And also touch on board membership if you got any thoughts.
I do think it's one that companies have to work out for themselves what the right way to address things are. And, at the end of the day, if they don't perform, then shareholders should change them. I'm not really a fan of being prescriptive. We've got, we have structures at the moment of minimum committee content and structure. And I'm certainly involved in discussions at individual company level about whether we should have a risk committee in addition to the audit committee. Do we need an investment committee, etc. And working out, is that a committee of the board? Is that a committee that's supporting the executives? Should we have an advisory council? So I think it's really a question of trying to work out what is the right way of operating and supporting the executives, who are ultimately tasked with delivering on the strategy. So yes, we are going to more involving more competencies in a structured way, but I wouldn't do that on a formulaic basis.
No, thanks. Monica and Maria, any views on changing structure of boards and committees and things?
I'm pretty much on the same line as my colleague. I would say every company has to find the best setup. I heard Pascal challenging, for example, the sustainability committee, saying that sustainability is a responsibility of the board, right? At the same time, there is a certain time where sustainability is kind of a nice to have or a second order issue, that creating a sustainability committee can put the light on sustainability and help raising the issue. So I would say that depending on the company and on the historical moment, on the maturity of the company, the right setup is the one that the company itself I think is the best suiting the need.
Yeah. Maria, do you share that view of giving companies a fair amount of discretion?
Yeah, yes, I think I'm also against any formula. I think each company is a different situation and also dimension, shareholder structure, and so on. At the same time, I'm concerned also about the kind of dialogue that board members with the right competencies, which I think is the challenge, of course, and diversity that was mentioned, will have to interact with the management, because the asymmetry of information on certain issues, which are extremely technical and difficult to assess objectively and to benchmark with the competitors, will make this dialogue difficult. To think about environmental choices as well as other factors related to ESG policies, which will not be discussed just in the committee, but will have to be incorporated in a strategy that the board is called to discuss. Yeah. So I think the dialogue will become more difficult, more challenging. At the same time, we will also need to make sure that the management skills are the proper ones to face all this and to prepare for a change in strategy or for a refinement of the strategy along the lines of the ESG journey that the board will discuss and decide. So I think it's a question of both board and management, and also of the technicalities and ability to really assess in a good way the choices. This is why I'm worried about legislation on the responsibility of board members, as ecoDa does as well, in these areas, because it will be almost impossible to have all board members experts in this area. So it's a tricky issue that we will have to really face and understand how well it can be managed for the purpose of improving shareholders and stakeholders' returns. But I would not like to think only about stakeholders, but also keep in mind that we are working for shareholders. So
no, thank you. And I mean, I think it's an issue you raised, Maria, on the question of, the challenge of managing the short term and the long term. I can be very long term, but if somebody tries to take me over because my short term results aren't great, that could be a challenge. Just asking colleagues, Pascal, any views on that? How you manage that?
Well, to take again the perspective of board organization, I think that the one thing is that one thing that the crisis has taught us is that boards need to be more flexible. And therefore, and again, going back to the question of committees, I think two things. First, that the board composition, when you select new members, they have to be selected with a view of what committee they will be joined, rather than the opposite, i.e. I select somebody to be a director, and then I wonder which committee he or she can join. And the other idea is that probably there is a future for more one-off committees to deal with an issue which arises. You're probably going to say, this is going against all we are saying about short term, but the real life of boards is that very often they have to deal with the unpredicted, i.e. issues that come out because the market has changed, because a competitor has risen, because you get your shareholder structure is changing, and so on and so forth. So I think it is important to keep in mind that the work which needs to be done by committees, which is preparing the work of the board as a whole, is very often a thing to be done in one-off committees or working groups, adapted to each, or task force, if you want, adapted to each coming issue.
No, thanks, Pascal. And I guess just to turn to, Monica, do you have any view on this balancing short and long term? Is it doable? Is it very difficult to balance the short and long term, Monica?
Yeah, I think it's difficult. I think it's difficult. However, this monolithical view of, for example, in the famous EY study, that the investors, that they are short term. while the investors is a galaxy of different typologies. So we have the mechanical investors, fundamental investors, and this they think very differently. So my only recommendation is to slice and to cluster and trying to figure out let's say what are the forces there. Again, on my opening point, I think that pre-engagement and open dialogue and strong rationale can be the recipe to discuss with unions and to discuss with investors and to find setup, because at this time the right decision is to privilege A or B, explaining why.
No, thank you. And Jock, any thoughts from your side on, I guess traditionally the view that the UK market has been quite short term. Any thoughts on whether that's going to change and there be a move towards long-term growth?
Well, I mean, the market overall is valued. I don't know what the latest number is now as we've been recovering, but it's something like 15 years earnings. So now that's less than the US, but I mean, that's hardly short term. So what that says is if you have a proposition which clearly shows value being generated, then the market will reflect that. So I think the challenge on us as boards is to lay out what the investment hypothesis is and be judged accordingly. I think the challenge at the moment, it's all sort of brought very much into focus, is how do you deal with uncertainty? And how do you demonstrate your ability to deal with that uncertainty such that you can deliver long-term value, whether that's investing in new technologies or dealing with an existential financial crisis that might be facing you, depending on which sector you're in. And climate, to my mind, is sort of wrapped up in all of that, because where the financial markets are going is saying that basically it's a rebuttable presumption, but if you can't demonstrate what you're doing, then you don't have a long-term value. So it's up to us to demonstrate how we are dealing with however it impacts upon us, those climate matters, and therefore demonstrate that our value is sustainable. So I think there's a lot in our hands that we can do if you think about it in those terms. I mean, there are always frustrations at the end of the day, but I don't think it's just a one-way street. I do think boards have the ability to help shape how they're assessed.
No, thanks, John. I suppose asking a tough question, so to speak. If one looks out with all these changes, do you see the companies that succeed being a very different ranking in 10 years' time than today? Do you think there'll be quite a number will fail, quite a number of new ones come up, or do you think most boards will manage to do it? I mean, Monica, do you want to have a go at that?
If you repeat the question, sorry about that. I was reading a question.
No, sorry, Monica.
Yeah.
No, do you think there'll be an enormous change in ranking of companies on the stock markets, i.e. some will fail, new ones will emerge, or do you think most will manage to come through the changes and manage it? I mean, do you see an enormous change in companies on the market?
We've seen that already in the oil and gas, right? So we've seen the difficulty, let's say the rise of let's say value of new electricity company versus oil and gas. So reinventing a business is really very difficult, and so the capability of reinventing the business in order to cope with the 1.5 degrees world is the one that will make the difference. And in that respect, I agree with Jock. This is really the climate is really the issue, and board members need to be really engaged with the management in order to find, let's say, the renewed strategy of the company to face with a different context.
No, thank you. Any other thoughts on that?
Yes, I mean, from my perspective, I see some industry being extremely impacted. So business model will have to change dramatically. As a result, some companies could go really either reinvent themselves or decide to, or will go out of the market, or will have to do some maybe, you know, to sell some of their businesses. So I see a lot of disruption potentially. At the same time, I think globalization will really play an important role. How much is it going backward? I'm not sure, but we know that some of the regions that have been less impacted by COVID will be extremely competitive. And I'm not sure that all the business model that initially were supposed to change as a result of being more local, less global, will actually be able to be less global. So that's another point that will also affect the ranking of companies. And finally, SMEs in Europe, we still have a lot of SMEs. This company are going to face all the challenges we were mentioning. Think about stakeholders, engagement, financial challenges, and so on. That will be another important area where things could change. But I think Europe, having a more united approach to capital markets and to financial markets, could help in this respect SMEs to really remain in good shape and maybe consolidate, but still remain an important part of our economies.
I think sorry, Joe. Yep.
I was just going to sort of say, I think, I mean, in terms of the changing team sheet of companies, that of course it's always the case. Yeah. But what we've got is been through an acute period of change, and question will be, to what extent is that sustained, or do things slow down a bit? I think at a company level, the challenge is for us to really understand what our value chain is, yeah. And therefore what our vulnerabilities and opportunities are. And many of us are really in early stages of trying to really understand that through a climate lens. And the other aspect that I don't think people really understand is what the consumer behavior is and can be to the climate equation, and generally people don't understand how their own behavior is impacting the overall carbon footprint. So we have got quite a period of vulnerability while we work through all of that.
No, thanks, John.
Can I bring just a short note of optimism?
Yeah.
Just to say that we've noted that the boards work more and more. So they look at these issues which are coming more and more seriously. Second, their competencies are also increasing, and in part because the investors and the shareholders look more seriously as whether the competencies are adapted to the requirements, rather than appointing people just on the basis of their names. And third, I think that SMEs have demonstrated during the crisis that they are not all dying and waiting for government help. There has been a certain amount of creativity on the SMEs. A number of startups started this year in the middle of the crisis, which is extraordinary. And I think that we have to be a little bit more optimistic and not focus only on the risk and the sadness of the crisis that seems to last forever and ever.
No, thank you. And we've had, just in terms of questions coming in, we've had some comments, but there's been a question on, I think in effect, 1 or 2 tier boards. Is one model better than the other? Any views, Pascal? Is it according to, political cultures, local cultures? Does it matter?
Well, I think that in any case, what is important is not not so much the structure, but the men and women that house them. And I've seen companies with only a supervisory board where the board is taking a very hands-on approach, and boards of directors where there should be more active, where they have been asleep. So I think it is, the structure is not so important as who you put in them.
Yeah.
Agree.
Yeah. Any other comments on structure? Does it matter?
Agree
Monica,
with Pascal. Really agree with Pascal. It is, I have exactly the same experience.
Yeah.
I agree as well. I think also the independent mind makes a difference. If I work with a team which is not only competent, but really independent and willing to do work for the interest of the company, then I see a different energy, a different ability to bring, you know, to bring real issues on the table, which makes a lot of work, as it was mentioned, but also a lot of possibility to change.
Yeah, no, that's it.
Yeah, I let's say also sign on this Maria point, be willing to dissent for good reasons, to challenge constructively, be curious and read more than what is provided in the pack. So I think all these are good practices that make a board more effective than another, an investment overall of our own time.
And I would,
thanks, Jock. Yeah, your thoughts?
I was just going. I agree with that. I mean, all I'd just say in the current environment, I think it's very difficult to disagree in this virtual environment, and so that's one of the issues I'd say we're probably grappling with at the moment.
Yeah. Now I think we've got. Thanks, Jock. I think you've had the last word there. We've got the. I'm getting the note to leave the breakout room, which I trust most of you are also getting. So many thanks.
That will happen automatically in 37 seconds.
Ah, sorry. Okay. So anyone like to, Michelle, any comments in the last 37 seconds? Now probably about 30. Oh,
we've lost Michelle again.
We've lost Michelle. Don't worry. No, but really, I suppose at this stage, let's just say thanks for a very good discussion. I think in your discussion, you brought out such a wide range of issues that really sort of highlights the complexity of running good boards at the moment. So may I just say a very sincere thank you to all of you